Welcome to Trading Lounge and the European indices. We'll cover the Dax and the FTSE for the 24th of June. And in line with the S&P 500, we're looking at wave 4 here, wave 1 and 2 and 3 and 4 and 5 here for wave 1, an A wave, a B wave and a C wave here for wave 2. And let's go and have a closer look. So last time we spoke, you know that we had wave B possibly over here and looking for a move down. That's not the case, so this is where we are left here in line with the S&P as well. So we need to consider this a impulse wave to the downside, and then an A wave, a B wave and a C wave coming into this space here, and then 5 waves down here for wave C. And is it possible for this to be the corrective move here and then have this as 1 and 2 here and then moving up for 3 here? Possibly, but we'll need to see more of an impulse wave coming through here and also a little bit higher as well. So we'll stay with the cautious side and we'll just look for 5 waves in this structure, as we are doing with the S&P 500 as well. So moving in closer to the market here on a 1 hour chart here. So the 5 waves coming into play here, and we know the 61.8% is here, so we have to look to the next level, which is the 78.6 square root of 61.8%. so that will take us up into 12,650 area. So that's actually the beginning of group 2. So between 12,000 and 13,000, we break the problem down into groups. So group 1 is 10, 20 and 30, 1, 2, 3, then 5, and then 65, 72 and 80. In a nutshell, they're just the Fibonacci numbers of 1, 2 and 3, 5 and 8 here, which we use as a price ratio. The move up through here has been a little bit tricky to count in the US markets because of Trump's tweet, which put the market down and then back together again. And yeah, so we're looking for 5 waves in this structure. I'm in line with the S&P 500. I'm thinking that we've got 5 waves to here for 1 and 2, and then 1 and 2 and 3 and 4 and 5 for the 3rd wave, back for the 4th and up for the 5th wave here. Of course, if this market dropped down to say the 400 area here, the 400 became the retested resistance, then you would see the market come further down at that point. So we need the market to hold above that 400 area there, and we'll take a closer look at that as well. So yeah, so from wave B up into wave C here, we could look at this as 1 and 2 and 3 and 4 here and 5 here, and then a sharp move back down to 61.8% possible. We could also probably squeeze wave 1 in being over here and looking at this as 1 and 2 in here, then 3 and 4 and 5 here, then having an A and a B and a C wave here. But look, to be honest, it doesn't really feel right either way that I do it, but we still need to look for those 5 waves to the upside. So in this case here, the 400 here, if that became the retested resistance, then we'd be moving down from that point. So I want to say this because if it moves down, we need to have a bit of a plan. So once that becomes the retest here, if the retest fails, then we need to be on the short side at that point. Don't trade the breakout through here because you can get trapped and the market can just move up from that point. It needs to retest it and then move down, a classic trading levels pattern. So as it stands at the moment, we can look at this as 1 and 2 and 3 and 4 and 5 here for this, and then an A and a B and a C wave here. There may be one more little move down here before that moves to the upside. And even to the upside here, we are looking at a impulse wave that requires 5 waves, so 1 and 2, and normally we see the 3rd wave come across the top here level with this somewhere in that space, and that's why the 4th wave can be a little bit complicated here, and then the 5th wave here. So the 5th wave may trade above the 1265 here, but probably not expecting it to find support at that level. But we'll see. If it finds support at that level, then it's in group 2. And if it's in group 2, then it's going to build higher, but it will need to find tested support in there. Trading above the 12,650 is not support. It needs to come back and test it and then move higher. So just be a little bit mindful of that. But as far as the crow flies on the downside, if 12.4 becomes the retested resistance, then we've got a problem, and we need to be on the short side for that because we'll come down further. On the long side here, we could look at 12.5 becoming support for any long trades and moving in on that side there. But let's take a closer look at the tick chart. So this is 100 ticks, and looking at wave B into this space, and either wave 1 here or here, not that it matters, but you can see that we've got 5-wave structure in this point here, so this is good. That's good news. And in this point here, we can see that we've also got an impulse wave to the downside that can also be countered with this here, and an A and a B and a C for the wave B here. But this is the one that interests me here because we need to count 5 waves down. So I can count down this as 1, and that's pretty fair and square, and then an A and a B and a C. Now, the situation here is that this wave 2 is really quite big compared to wave 1 here. So normally in a correction, when we're looking at a correction, we would see wave 1 and 2, 2 would be just very simple and sharp. Wave 3 would be up, and I should have done this downwards, but wave 4 being rather complicated, and then moving up like that. If this one is simple, then this one's going to be complicated. If wave 2 is complicated, well then this one's going to be simple. So I'm considering this, that even though it's a simple ABC, it's complicated in that the size of it compared to wave 1 here makes it complicated. So wave 4 is going to be simple. So in counting down, we can count 5 waves, 1, 2, 3, 4, 5 here for 1, also 2 here, rather complicated, and then 1, 2, 3, 4, 5 for the 3rd wave, ABC for the 4th wave, another little 5 waves down here. So I could count wave 3 to here, and that would leave that as an A and a B wave here, which I'm quite happy with actually as an ABC, and then up for 4 here. So 3, 4, and 5 as the low here. But if it doesn't count like that, then I have to bring the count down further and treat this as wave 4, and we'll have one more low in here. And this is where the 12.4 comes in, because, you know, if we have a wave 5 down here, I wouldn't expect wave 4 to be, I wouldn't expect the 12.4 here to be, to become the resistance. But if it does become the resistance, then you know that we'll be heading down. So there will be a bounce or consolidation off it, and then a move through, and then here for this. So, well, that clarifies that, doesn't it? So we can remove that here. So this is where the trade can come in on this side here. So once that breaks through here, don't chase it, let it come through and let it go back and retest, and then a point under that, then that's your short trade, because it needs to reject that level. If it doesn't reject it, it means that it's accepted it and it's going to move up from that point. So it needs to reject it, and that rejection is your opportunity at that point. So for wave 4 here to wave 5 here, we'd be looking for 5 waves down of 1 and 2 and 3 coming down here. Same as on the lows here, you get that wave 4 consolidation area there, and then wave 5 coming down. So the bounce can occur off this level here. For that. So that's really where it sits at the moment. And we'll have a look at the FTSE just quickly though, because it's kind of it's in the same situation. However, instead of counting from an A wave here, got the A wave here to the B wave up here. Now we can count this. I've got 5 waves in here, so I've got to leave that there, and then all of this here gets rather complicated, and it doesn't count as well as it does on the DAX. So we could very well count it as a triangle, as an A and a B and a C and a D and an E wave here, and then looking for 5 waves up. But the 5 waves up here is just really bad as well, because we've got 1, 2, 3, 4. We're already overlapping here as well for this one here. So I know this is a weaker market. I just don't know which is the best way to treat it at this point. So I don't really have any answers here for this. We'll allow this as one and two, as an A and a B, and then 1, 2, 3, 4, 5 here, the same as the FTSE to the DAX to play out. Once that plays out here, we'll see. If it comes back up and gets support on 6.3, then you can go long from that point, but only just above these highs here for that. And yeah, we've just got to see how this plays out. But we are looking in the bigger picture for this. Of course, we're looking for whatever occurs here, and this is probably a good one to trade short rather than long as well, you know, because it's just not holding up as well as the other market. So but from the A wave here, the B wave here would be looking for a C wave to come down into this space here for this. So it's really about where, you know, where does this break down and so on through here. So yeah, I don't think the Elliott's any good for me in this space here, because I just go into the guessing game and I don't want to take you through that. But if I look at the S&P 500 and the DAX, we should see one more move up. I don't know if we get that, but if that short trade comes in for the DAX at 400, at 12,400 for the DAX as a retested resistance, then you can short this market. So wait for that. I mean, that can be, I mean, for the sake of it all, this could just sit right here as well for that here, and then just come straight down from that point. That's the other way to do it, but there's no relationship between wave C and wave A in this case. But I know this market will just bend around to what the other markets are doing, so it doesn't really have it doesn't look like it has its own identity at this point. Sorry to say. The other point here too is that on the bullish side, just for a moment, is we've got 6,000 here, the closest largest number. Then we've got 1, 2, and 3 minor levels, which make up group 1. And if we get support on top of group 1 here, then we can look higher towards the 6.5. So I need to say this because this is trading level stuff. And with the trading levels, we see that the market's come up, arrived here, had the reaction all this way through here, and has finally made its first high above the level here in a way. So if this level becomes support, well, then I'd be wrong, and this market can move up higher from that point up to the 6.5 at that point. And it has a good base to do that, because even though this looks ugly through here, this is what happens with markets in terms of just basic technical analysis, is that when a market moves up and then it goes sideways, it's actually quite a strong picture, and it's impulse correction, which is this is a continuation pattern, and then normally you can just grab the distance of this here and stand it on its head here, and that's squaring time and price. That's Richard Wyckoff's work back from the early 1900s, so 1930s, 20s, 1890 onwards, I think, up in terms of Gann stuff. He was the one that got the relationship between price and volume working first. He was the first person, so he's a good read, Richard Wyckoff. So really, this is an accumulation process here that should equal the distribution process to the upside here. That's the normal case of things, but the Elliott structure is not suggesting that. But if this becomes a nice support in all of this here, then that's possible, and we'll look at that if that occurs. Alrighty, thanks for tuning in. Cheers.